Dubai's foreign trade totaled 323 billion dirhams in the first quarter of the year, with China named as the Emirates' top trading partner. Officials did not give the year-earlier figure for comparison, but did say trade was experiencing the same momentum it had in 2013, when it saw foreign trade of 1.32 trillion dirhams, a rise of 94 billion dirhams on the previous year. In Q1, 201.4 billion dirhams of trade were imports, 26.5 billion dirhams exports, and 94.4 billion dirhams re-exports, according to local reports. It was further added that direct trade contributed 61% of Dubai's foreign trade, while free zones contributed 38%, and the customs warehouses made up the remainder. China topped the list of Dubai's trading partners in the first quarter of 2014, constituting 12% of the Emirates' overall foreign trade, with a trading value of 38.5 billion dirhams compared to 30.3 billion dirhams in the first quarter of 2013, which was up 27%. India came in second with 8% of Dubai's total foreign trade, equivalent to 26.3 billion dirhams, followed by the US, Saudi Arabia and Switzerland. The UAE continues to be a promising and an emerging player in the global gold industry, particularly in the retail side. However, 2014 still remains the year for equities. That's according to experts who spoke during the 13th MENA Forex Conference and Expo in Dubai. Market analysts from more than 30 forex trading, financial and brokerage companies have been participating in the two-day forum, where discussions were led on the current trends of global capital and commodity markets and expectations for the year ahead. Among the top discussions at the conference was the future outlook of the gold industry. According to the analyst from Al Pari, the UAE, with its large Indian population, remains a key player in facilitating the retail sector of the industry. The UAE, together with India and China, are the largest consumers of the commodity, and due to the retail side's stability and support, this year may not see large fluctuations in the global price of gold. According to his estimates, the price could reach as high as $1,400 per ounce over the next few months, however, not below $1,000 an ounce, largely due to the retail demand.
In Dubai more and more, it's a big center of gold trades. And gold with fluctuations and volume, I think Dubai will bring more volume in terms of physically and in terms of contract trade volumes. It will be more and more involved in this. Gold should reach again 1,435. He know by heart this area and he like it too much, even if you're going up or you're going down. This area of 1,435, 1,480, it's very familiar for this gold commodity. So I think he missed these levels, and I think he should go up again to these levels, and after maybe to take another downtrend. But from here to go down and break 1,000, I find it's very difficult, at least for short term.
Analysts have also described 2014 as the year of equities, mainly due to the performance of the US dollar, which hasn't been as bullish this year as expected. Speaking at the forum, the analyst from the online forex provider Swissquote stated that the global economic factors are not supporting the industry, with the massive gains in US equities and gradual economic recovery, coupled with low inflation in China, have impacted the gold industry.
If you want to see gold increasing, then it's going to be gradually, not strong like bullish trend. We don't expect gold will go higher in one shot like what happened in 2012 or 2011. I think now we have a different scenario. Now we are not talking about crisis. We are not talking about big problem in the market. We're not talking about dilemma in the Eurozone. We are talking about recovery. We are talking about there's no more effects by the geopolitical tensions.
Markets experienced heightened levels of volatility through trading last week, but closed the week on a positive note. The Dow Jones closed at a record high, as did the S&P index. Friday's US non-farm payrolls report showed gains of 217,000 new jobs during May, with the unemployment rate remaining unchanged at 6.3%, both figures largely in line with the expectations. Over in Europe, President Mario Draghi introduced additional liquidity measures through mini LTROs, as well as slashing the ECB's deposit facility rate and cutting the marginal lending facility rate. To talk more about this, along with the week ahead, we earlier spoke with Gaurav Kashyap, the head of futures at Al Pari, Middle East.
Well, we saw a large amount of volatility to close out the week, particularly with the release of the US non-farm payroll report, but more so because of the European Central Bank rate decision on Thursday. During the rate decision, we saw President Mario Draghi slash the depot rate as well as the marginal lending rate, and he also introduced a mini LTRO. Now, the pricing movement was quite funny because we saw the euro sell off rather aggressively against the major currencies, but it did manage to recover above 1.36 to close out the week. We did see equity markets in the US close at record highs. The S&P closed just below 2,000 and the Dow Jones also closing below 17,000. So what it shows is that markets were perhaps expecting a little bit more from the ECB and a little bit more from Mario Draghi. And the moves that he introduced on Thursday could be in a bid to buy a little bit more time before he announces some larger asset purchases the next time they meet next month. So overall, markets did end up shrugging off some of those moves introduced by the ECB, and we can expect a little bit more upsides in the euro. Overall, the euro USD should find support at 135.70 levels. Below this, we can expect support at 134.80 levels, but overall, the moves are expected higher for the euro in the week ahead. Also, if we look at the Indian rupee, the pair should trade between 58.80 and 59.10 in the week ahead. That equates to about 168.80 and 170.10 on DGCX, the Dubai Gold and Commodities Exchange. Also, gold looks good to find support at about 1240 levels. Resistance will come in at about 1290 levels, so we expect the precious metal to trade in this range in the week ahead. Overall, the economic calendar will remain light. We will be focusing on some Chinese data in the week ahead. We did see some good trade data coming from China this morning, which showed a strong boost in exports. We will be watching for the inflation data coming out from China later this week, expected at 2.4%, and we will be looking at that industrial production number, which is expected to show an increase to 8.4%. But overall, markets will remain mixed to range bound, and they will move higher against the US dollar in the week ahead.